So today we're going to talk about something really important, especially while we're going through the stock market crash, about buying in the bottom of that crash. Can you time the bottom? And today is going to be a video saying why you can't do it. I've heard this in many places, in the comment section, on forums, people saying, oh, I'm holding cash, I'm going to wait for the bottom, or when it hits the bottom, then I'm going to put some money in. And trying to catch the bottom is nearly impossible. And today I'm going to share the information with you guys to show why that is. And a lot of this information is actually from a YouTube channel called Jazz Wealth. It's a channel I watch all the time. Fantastic YouTube channel. I've been watching them since I think under 10k subs. They've got far over that now, but it's been 5 years since I think I started watching them, and it kind of shows you what a good set does for your YouTube channel. Maybe I need to take some tips and up the set game here. But anyway, enough of that. Go check that YouTube channel out. But yeah, I thought this was a really good video to talk about catching the bottom of the stock market and why it's nearly impossible to do it. And really, the best way to do it is dollar cost averaging. I do that all the time. Dollar cost averaging into a stock is 100% the best way to get a good bottom. As long as you see a stock at a good valuation, that is normally the best way to get a good average, is dollar cost averaging, and it should give you a nice average. And there's no magic formula for catching the bottom. There's no magic formula. There's not something that goes, oh, if you do this and this and this, this is where a share price will go to. Unfortunately, stocks will bottom out where stocks bottom out. Unfortunately, the stock market can take them lower and lower and lower. And that's the crazy thing with stock markets. The stock market can drive stock prices to incredible lows and incredible highs, and there's no projection on how low that's going to go or how high it's going to go. And I was speaking this about the idea really from this video was I was speaking about this the other day on a couple of videos. I can't remember if those couple of videos were on the YouTube channel, or I can't remember if it was on the Patreon. I dropped a video on how to value a stock, which is about half an hour long on the Patreon. So if you do want to go check that one out, join through the link in the description. But it might have been on that video there. But there's no magic formula for being at buying the bottom of the stock. And sometimes I've seen this before. I've talked about it this year where I've been personally down on a stock 30%. And people have gone, oh, you're down 30% on so-and-so. It's a terrible pick. What are you doing? And it's like, being 30% down in a stock isn't that bad when you consider the bear market we've been in. Quite easily, sometimes stocks can rally up 30%. And to be going down in this bear market and to be only down maybe 0% or to 5% is nearly impossible. So you have to accept that sometimes being down 10%, 20%, 30% on stocks isn't too bad. And actually sometimes being in that sort of range isn't a bad average at all. So when you're hitting a downtrend, quite often you think this here is the low. This here is the low. This here is where it's going to bottom out. But actually when it hits that bottom and it starts going on the uptrend and we're going to a bull market, how long in that time frame where you hit a bottom does it stay there for? That is the question. In this range here, so when the stock market bottoms out up to 5% up from the bottom, how long does it stay in that range? 14 days. 14 days. Technically, from the bottom to 5% up, whenever a stock market crash bottoms, you have 14 days to buy stocks. So you think about that. We've been in a bear market for, let's say, at least 365 days so far. 365 days. And in them 365 days, you think you can work out the 14 days that stock market's going to bottom out? It's tricky. It's impossible. To get those 14 days right are so hard. And that's why we're saying here, 30% actually isn't that bad to be down, because when you consider a crash going down and then the bull market going up, 5% is that sort of range. 30% down is actually that sort of range, which isn't that bad at all. And the funny thing is, the 14 days is the average. When we were actually in the CV dip, do you know how many days that bottomed? Do you know how long you had to catch the bottom of the market in the CV dip? 2 days. 2 days to catch the bottom. That's how tricky it is to catch the bottom. Now that was obviously a quick rebound, but the average is 14 days. So when we look at the current market that we're in, the 2023 or let's call it the 2022 crash, the 2023 crash, 2022 crash, the one that we're currently in. What is the bottom at the moment? So technically, if the market was to rally from here, which at the moment it's doing, at the moment the bottom is in, but we don't know yet. We don't know if the crash is over. But if this is the bottom, and we've had the rally in the last few weeks, how many days was it down this time? 25. So if you look here, a little bit higher than the average, but still nothing too crazy. So this is how hard it is, because technically if this has, now the market has bottomed out, you've missed it. And that's why dollar cost averaging would have helped you catch at least some of the bottom. And you wouldn't have realised that if this is the bottom, them 25 days were the bottom of the market. And that's how hard it is to realise that this is potentially the bottom of the market. And since we bottomed, we are currently up something like, I believe it's 10%. So obviously it wouldn't take a major drop to go further down. But at the moment, that's how quickly sometimes the bottom goes out the market. And the only way to kind of balance this out or help with the risk of not trying to time the bottom, because it's so tricky, and when it does hit the bottom you only have a select few days, this is 100% why dollar cost averaging is the best strategy. As long as you're averaging in and bringing the average lower and lower and lower, the more the market goes, that at least helps you get some way to the bottom. You don't need to be, like we were saying, exactly at the bottom of the market, because that's so hard to do. All you need to have a good average and be somewhere in that range. And sometimes at some of the bad points, like we said earlier, that could look like you're down 30% on a stock. But in a longer time frame, that actually could be a pretty good average, because the chance of you hitting them lows are so tricky. So just a little bit of a fun fact video there for you. Hope you enjoyed it, talking about the bottom of the market and potentially how long do you have to catch the bottom of the market, and if we are currently in the bottom of the market, what that would have mean. So yeah, hope you enjoyed the video. Smash the like button if you're new around here, subscribe. Catch you in a bit.